Having a full daycare sounds like a great place to be. Your classrooms are busy, families are enrolled, and tuition is coming in every week. From the outside, business looks strong. Still, you could reach the end of the month, look at the account, and wonder why there isn't more money left. Full enrollment tells you people want what your daycare provides, but it doesn't tell you how much of that tuition stays in the business after the bills are paid. Running a daycare comes with a long list of expenses, and payroll is usually one of the biggest. You have teachers, assistants, substitutes, and other staff members who keep the center running throughout the day. Staff schedules change, wages increase, someone needs extra hours, or enrollment grows enough that another employee has to be added. More children bring in more tuition, but caring for more children also costs more. Looking at enrollment alone won't show you whether payroll has started taking a larger share of your income than it used to. Food and everyday supplies also take a bigger bite than many owners expect. Breakfast, lunch, snacks, dinners, cleaning products, paper goods, classes, classroom materials, art supplies, learning materials, and other purchases keep showing up week after week. One shopping trip may not look like much, but adding every purchase together for the month gives you a much better idea of what you're really spending. $5 here, $20 there turns into much larger number once you see everything together. Money coming in deserves the same attention as money going out. Full enrollment does not automatically mean every family has paid everything they owe. Several parents could have outstanding balances. Someone could still owe a registration fee, or a payment expected on Friday could still be missing the following week. Payroll, rent, food, and utilities still need to be paid whether parents are caught up or not. Even a small group of late payments puts pressure on cash flow when the daycare is depending on that money to cover expenses coming due. Tuition rates are another piece worth reviewing. Rates that work well 2 to 3 years ago may look very different against today's expenses. Payroll costs haven't changed. Food costs have changed. Insurance, utilities, supplies, and other operating costs have changed too. Keeping the daycare full is great, but strong enrollment does not fix tuition rates that no longer match what it costs to provide care. You could serve the same number of families, stay busy all year, and still keep less money because your expenses have grown faster than your rates. Daycare owners also have to deal with expenses that do not show up every week. Maybe a refrigerator quits working, playground equipment needs a repair, classroom furniture needs replacing, or something in the building needs attention. Licensing fees and insurance payments come due. One large bill could quickly change how comfortable the account looked at the beginning of the month. Giving those expenses a place in your financial planning helps you see how much cash actually needs to stay available, instead of treating everything in the account as money you have free to spend. Taxes belong in the picture too. Seeing a healthy balance in your business account does not always mean all the money is available. Part of it could already be needed for payroll taxes, estimated tax payments, or other obligations coming up. Spending based only on what you see in the account today could leave the daycare tight later in the month. Your bookkeeping kit gives you a better view because it shows what has already been spent, what still needs to be paid, and what money already has a purpose. Owner pay matters as well. You put a lot of time and energy into running your daycare, so you should know what the business is actually paying you. Pulling money out here and there without tracking it properly makes them numbers harder to understand. Your records should help you see how much the daycare earned, how much went toward operating expenses, how much you paid yourself, and how much needs to remain in the business. Without that information, a busy daycare could look successful while leaving you unsure about what you are actually earning from it. One of the best things you could do is look at the last 2 or 3 months together instead of judging the health of the daycare from one bank balance. Compare the tuition you actually collected with payroll, food, supplies, rent, insurance, utilities, taxes, and other expenses. Look at unpaid parent balances and any larger bills coming up. You may find one expense taking more money than expected, or several smaller expenses adding up over time. Either way, seeing everything at a glance gives you something concrete to work with. Full classrooms are a positive sign, but the money behind those classrooms still has to support the business. You want to know whether the tuition coming in covers what it costs to care for the children, pay your staff, running the center, handle taxes, and pay yourself too. I'm Kim Clooney, a licensed CPA in Montgomery, Alabama. I'm offering daycare owners a free 30-minute business tax and bookkeeping review to help you take a closer look at where your business stands financially. Bring your questions about bookkeeping, expenses, taxes, or anything your numbers that has been bothering you, and we'll talk through the areas that need your attention. Request your free review today and get a better understanding of where your daycare's money is going before fall gets busier. Then think it is the description. Click the link in the description of this video.